Jerome Powell and the Fed just restarted the money printer. And just to be clear, everybody, this is not QE. I repeat, this is not QE. It's reserve management purchases. Regardless of what they want to call it, the Fed is purchasing $40 billion in treasuries a month, starting today. And for the first month, they're going to actually purchase $54 billion. Call it reserve management, call it technical operations, the markets don't care. Liquidity is rising, and gold stocks and Bitcoin should respond accordingly. Meanwhile, the CFTC chair just announced that Bitcoin can be used as collateral by big banks. And ironically, Michael Saylor was also posting a picture, a cryptic picture, from himself inside of a bank. I believe that this marks the beginning of MicroStrategy's Bitcoin strategy, making its profits go through the roof. All the noise about them not being a profitable company might have just gone out of the window with this announcement, and I'll explain exactly why. These are huge stories for Bitcoin heading into 2026, and I'm going to break it down. This is Dante Cook with Bitcoin Simply. Let's go. Can you imagine a press conference with Jerome Powell at the podium? So we're going to start reserve management purchases at $40 billion a month starting tomorrow. We're doing this to maintain liquidity and ample reserves in the system. This is not QE. I repeat, this is not QE. These are called reserve management purchases. Question for you in the back. So Jerome Powell, let me get this right. We're creating $40 billion a month out of thin air that doesn't have to be repaid by the banks, that are being injected directly to the banks. Is this not just another form of quantitative easing? Yeah. Someone please remove Susan from the press briefing room immediately. Thank you. The New York Fed, regardless of what you want to call it, says that they're taking the $40 billion a month and raising it by 14. $54 billion in treasury bills are going to be purchased tomorrow and injected directly to the banking system. These are always permanently temporary programs. When Bernanke said the QE program starting in 2008 and 2009 was temporary, well, it's been rising ever since. Look at this chart. The temporary program took off in 2009 and it grew all the way until 2020, where it exploded. It's how the system works at this point. Debt must expand and the dollar must be devalued in order for the US dollar hegemony to continue to work and operate around the globe. And this is why assets like stocks, gold, and Bitcoin always go up over time. These are fixed assets that are being flooded with an unlimited supply of dollars. But let's be clear, these purchases alone aren't enough to move markets. However, it's a major pivot and signpost. And when you couple this with the plans of the current administration, well, you have to be bullish on assets like Bitcoin going into 2026. This administration is clearly of the opinion that we need to be in growth mode.
Results, the market should go up, and we should keep driving it up and have it keep going up and let it be much, much bigger, much, much better. And, growth doesn't mean inflation. They're always afraid that, and if there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff. And, you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather small number that could have been doubled, at least doubled.
He said the rate cuts should have been at least doubled from the 25 basis points that we just got earlier this week. When you couple this with the fact that the administration has a ton of ammo in order to go in growth mode, they just announced that they had the lowest deficit, $52 billion, the lowest deficit, since June of 2020. This is pretty big news.
Minus $52.8 billion. That's a better, lower trade deficit than we expected. We were looking for a number closer to $62 billion, and that follows a revised minus $59 billion. Minus $52 billion would be the lightest going back to, wow, we're really going back. Well, my records go back to 1992, and to find a smaller number than minus $52 billion, we're all the way back to June of 2020.
And when you couple this with the fact that the president said that the only imperative for the new Fed chair to come in is to lower rates and to do so immediately.
I want to ask about interest rates because a lot of Americans agree with you that they're too high. You're going to pick a new Fed chair soon. Is it a litmus test that the new chair lower interest rates immediately?
Yes.
Donald Trump didn't even let her finish her question. Yes. That's how eager he is to cut rates. And no wonder he's so eager. The United States has a massive problem on their hands. Look at this blue bar on this chart. This is $9 trillion worth of debt that is coming due and needs to be refinanced in 2026. Well, they're going to be refinancing them at much higher rates than they were when they were virtually zero when they borrowed them in 2020, which means the interest payments that we are now paying are going to go up dramatically. We're already paying over $1.2 trillion a year in interest payments. This means that this administration has to go, and grow. That's the only way to outpace the interest payments and the amount of debt that we need to supply the system to actually grow. And all of these things are massive catalysts for Bitcoin, not to mention the fact that the CFTC chair said that Bitcoin can now be treated and used as collateral within the financial system.
Well, good morning, and thank you so much for having me here on the show. So I think what's really important to understand is that we are doing a limited pilot program that has important guardrails that are in place because we've seen with the events that have happened on offshore exchanges that it's more important than ever that Americans deserve safe U.S. markets under U.S. regulations. So what we've done to structure this pilot program is that if you are using a CFTC broker, which is what are our futures commission merchants, those are registered by us, those are overseen by us and the National Futures Association, which is like FINRA, you will be able to use Bitcoin, Ether, and USDC to collateralize contracts that are denominated in those Bitcoin, Ether, or USDC. And it's basically in-kind collateral, so that's very limited in what you can do. You can't use it instead of cash, for example, but you can use it to collateralize those in-kind contracts. And then we are putting into place enhanced
just to be
monitoring.
clarify, it's in-kind, so Bitcoin for Bitcoin, or could it be Bitcoin for Ethereum?
Bitcoin for Bitcoin. So if you're going to settle in Bitcoin, it's denominated in Bitcoin, you can collateralize it with Bitcoin because it's the same way risk. And we have enhanced CFTC monitoring and reporting in place. So for 3 months, we are requiring that we not only get weekly position and asset class reporting, that's on top of the normal reporting that our exchanges do, but we are also asking for a reporting of any significant operational issues relating to that digital asset collateral. So again, this is a safe way to understand the technology, to understand the uses for these assets, but in a controlled way.
There's been a lot of talk about why Bitcoin is valuable and why Bitcoin treasury companies have been stacking Bitcoin. And Jack Mallers has been recently talking about why they have an opportunity that's been left in the market from Coinbase and from MicroStrategy, not offering and creating digital credit and digital lending products. Well, I think that window is actually being closed. Listen to Jack talk about this here, and I'll tell you why that he might be wrong and behind the ball.
Listen, Bitcoin's compound annual growth rate over the last 5 to 10 years, call it 50% a year. An easier way to conceptualize that level of growth is it doubles every 18 months. People want to create a cash liquidity event with their Bitcoin without selling it, without having a capital event, a capital trigger on that. And so the fact that there isn't a market for them to borrow against it, for different credit products, lines of credit, termed loans, we think we can live in that space. We are shocked that this is a $2 trillion asset class going on what we believe to be 20 trillion and 200 trillion. Yeah. And there are fundamental financial services that no one of our scale and size is focused on. Right? We look at a Coinbase and we're like, what a successful business, in earnings and in net profit. But nobody's focused on Bitcoin credit. And we look at a strategy, acquired a lot of Bitcoin, but nobody's building products.
I believe that strategy is actually going to beat them to the punch. MicroStrategy holds 660,624 Bitcoin. And now they can effectively begin leveraging that collateral to lend to other banking partners and institutions who want to get into Bitcoin. Their CEO, Phong Le, talks about this right here.
Phong, to switch gears just a little bit in terms of other types of businesses that strategy could be involved with, lending of Bitcoin, it reached a record high in the third quarter. Why hasn't strategy gotten involved?
Yeah, we run a very simple business, right? I've been doing this for 10 years now, 5 years with Bitcoin. We buy and we hold Bitcoin. I do think over the course of the next year, and I'm quite excited about it, traditional finance entering the Bitcoin world. companies have made announcements, Citibank, Morgan Stanley, and others, big real banks are going to offer custody service, lending service, and staking and otherwise. I think when they enter that space and we have different counterparties, it's something we would consider and I think would be enthusiastic about.
They're going to now effectively be able to gain a yield on the Bitcoin that they hold as a treasury asset when they lend it to other institutions who are looking to get into Bitcoin. This aligns with the in-kind conversation point that Caroline Pham announced, the CFTC chair, in that former clip. And this means that MicroStrategy is going to be able to generate massive amounts of profits from their own Bitcoin stack. Before we go any further as to why this is important for Bitcoin heading into 2026, let's thank our sponsors. Ledn has been one of the leaders in Bitcoin-backed loans since 2018, issuing nearly $10 billion worth of loans at this point to tens of thousands of customers all across the globe. They do so fast, transparent, and in a simple manner. You get a loan that is collateralized up to 50% loan to value, meaning if you want a $1,000 loan in fiat, well, you post $2,000 in Bitcoin collateral. The loan actually isn't rehypothecated or lent out to anyone else. You just unlock liquidity from your Bitcoin in a safe, smooth, simple, and transparent manner. The fiat gets into your account in less than 6 hours and the application takes just 2 minutes. There's no credit check and the loan starts at just 12.4%. Or you get 0.25% off your first loan by going to the link at learn.ledn.io/simply. Don't sell your Bitcoin. Work with the Bitcoin way. If you're interested in growing in your Bitcoin journey from a person who just buys Bitcoin on an exchange to someone who holds it in self-custody, there's some steps in order to do that. And coaches from their team will walk you through how to do that privately, safely, securely, and confidently so that you can become a sovereign individual in your Bitcoin journey. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin. Adam Back just talked about major banks getting into Bitcoin recently, talking about how this is a major move for Bitcoin, and his predictions are already coming true.
Yeah, I mean, I think, having experienced the previous 5 and 10 years, things have moved much, in the short term, people don't see the speed of development. But if you go back 5 years, it's pretty surprising where we are. If you go back 10 years, you wouldn't have expected at that time all of the major banks to be vying to provide Bitcoin-related products and services, making model portfolio recommendations, sovereign wealth funds, buying Bitcoin, pension funds, all of these things. And there's been a lot of regulatory improvement over this past year as well in terms of the types of banks that are now able to be custodians. So I think that opens the gate for people.
Major banks are rolling out Bitcoin access, and they're going to need the backing of Bitcoin and crypto native companies to do it, like PNC, who's working with Coinbase in order to offer Bitcoin-backed services to their customers. They're going to be rolling out buying, holding, trading, and lending products and credit products to their customers in 2026. You couple this with the fact that more everyday Americans are going to be getting Bitcoin through this type of avenue. But what if they're also holding it in their retirement accounts? Congress is begging for Bitcoin to be held as an asset in their 401ks. Can you imagine $9 trillion worth of retirement assets flowing into Bitcoin? What if everyday Americans hold it in their banks, in their checking accounts, in their retirement accounts? Do you really think Bitcoin is going to zero at that point? And this is why we are in the digital gold rush and why Bitcoin is going to go up 20 to 50% a year for the next decade. It's not going to take much for this entire market to move.
We're in a digital gold rush. Well, over the next 4 to 8 years, we think institutional adoption increases drastically. We think sovereign adoption increases drastically. We think digital credit starts to permeate throughout the rest of the market. Because of that, those dynamics, you've got even the Bitcoin ETF being the most successful ETF in history. That success is going to breed more success, and it already has. So because of those dynamics, the macro environment, we see probably the next 4 to 8 years between a 30 to 50% compound annual growth rate for Bitcoin. And we think that will start to taper off as economies of scale and large economies of scale start to come into play. Once Bitcoin's at a $10 trillion asset, it's probably going to be significantly less volatile, and the compound annual growth rate will be reducing over time into the future.
But you think we get 30 to 50% over the next decade?
Yeah,
I'll take it.
Yeah,
I'll take that.
Right. I mean, you look at the last 7 years, and it's been like 70% compound annual growth rate. Even what in 2022 is at 16,000, and what we're at 90,000 right now. What is that? That's a lot. Yeah, right. Like annualize that. That's 70-80% probably. And I don't think it takes a lot of capital to move it much higher.
So one of the interesting things in the treasury world is that, like, when strategy came out,
we have plenty of ammo right now, and there's still plenty of people that are bearish heading into 2026. We have the money printer, or shadow QE, reserve management purchases of $50 billion a month, albeit not a lot, starting to happen, which means this is a major pivot for the Fed and for this administration. We're moving from a scenario of quantitative tightening to quantitative easing. And when you couple this with the fact that this administration is in go, 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 grow, grow, grow mode because they have a bunch of debt due, and because this president and this administration is very clear about their stance on growth and moving the American industrial revolution forward. When you add up all of these things, and major banks getting into Bitcoin, you have a scenario that is a bullish cocktail heading into 2026. These are just my thoughts. But what are yours? I'd love to hear them in the comments. One of the ways that you can continue to grow in your Bitcoin journey is not by just buying Bitcoin in exchanges. It's by participating in the network, by adding more hash power onto the network. That means you can earn Satoshis while you sleep, safely, confidently, and with no middlemen or no markups. You can do that by working with a company like SAS Mining, where you can buy a state-of-the-art mining rig and machine that gets plugged directly into the Bitcoin network with carbon-free, 100% renewable energy. You'll get sats streamed directly to your wallet without you needing to lift a finger, cool a machine, or worry about your basement being noisy because you have a bunch of Bitcoin miners in it. Use this QR code to get started with carefree, hassle-free, state-of-the-art Bitcoin mining services with SAS Mining. This is Dante Cook with Bitcoin Simply. Thanks for tuning in, and if you haven't already done so, subscribe to the channel. Happy stacking.